Hey everyone, welcome back to Corporate Decoder. Today we are diving deep into Marcus and Millichap's latest financial report. And let me tell you, it's a bit of a mixed bag, like finding a good deal at a closing, but with a little less fanfare. Alright, let's get straight to the numbers. This report covers the second quarter ending June 30th, 2025, and it gives us a snapshot of how Marcus and Millichap's business of buying and selling commercial real estate is doing. When we look at the balance sheet, total assets for the company stand at $92 million as of June 30th, 2025. That's down from over $869 million at the end of last year. Now, what does that mean? It suggests they might have been a bit more cautious with their spending or perhaps sold off some assets. We need to talk about the income statement. For the 3 months ending June 30th, 2025, Marcus and Millichap reported a net loss of almost $11 million. That's up from a loss of about $555 million in the same period last year. Ouch, a bigger loss means they're spending more than they're earning. But wait, there's more to the story. Real estate brokerage commissions, which are the company's bread and butter, actually went up to $141 million for the quarter. That's up from $135 million a year ago. So while the bigger picture shows a bigger loss, the core business of selling properties is bringing in more money. And get this, financing fees shot up by a massive 43.5% to $26 million. This is a huge jump and signals that their financing services are really in demand right now. However, when you get more business, you often have to pay more for it. Cost of services went up by 8.7% to over $166 million. That's mostly commissions paid to their agents. And their selling, general and administrative expenses also climbed by over 10% to $71.5 million. The company mentions this is partly due to investments in attracting and keeping good talent, which makes sense in a competitive market. So while the total revenue actually grew by 8.8% to $72 million, those rising costs meant a bigger net loss for the quarter. It's like having a great sales day at your store, but a lot of your expenses also went up, eating into your profits. Now let's look at the first half of the year. Total revenue is up by 10.4% to $317 million. Real estate brokerage commissions grew and financing fees saw a healthy 35.7% increase. That's good news for the business itself. But again, cost of services jumped by 11.4%, and selling, general, administrative expenses also rose. As a result, the net loss for the first half of 2025 widened to nearly $15.5 million from about $15.5 million from about $15.5 million in the same period last year. So even with more revenue, their losses are staying pretty much the same, which isn't ideal. Something interesting here, the average number of transactions per investment sales professional actually went up in the first half of the year. That means each agent is getting more deals done, which is a positive sign for their productivity. We're seeing stock-based compensation costs going up too, from $11.6 million last year to $12.4 million this year for the first half. This is usually tied to giving employees and agents stock options and awards, which is a common way to attract and keep talent in this industry. Let's peek at their investments. Marcus and Millichap holds a significant amount in marketable debt securities. As of June 30th, 2025, these investments were valued at around $246 million. They've also reported some unrealized losses, mainly due to interest rate changes, but the company seems confident in recovering these as they don't plan to sell these securities. They also have contingent consideration to deal with. This essentially means they might have to pay more money for past acquisitions depending on certain future performance goals. The value here is around $820,000 as of June 30th, much lower than the almost $5 million at the end of last year, suggesting some of these obligations have been settled. Now, about their cash, they have about $86 million in cash equivalents, and restricted cash. This is down from $1,433 million at the end of last year. The company mentioned the decrease is partly due to increased stock repurchases and payments on deferred consideration. While they believe they have enough cash for the next 12 months, this drop in cash reserves, coupled with the increased losses, might be something to watch. It's worth noting the average commission rate has been inching down slightly, from 1.89% last year to 1.76% this quarter for brokerage. This is often because larger deals, while bringing more overall money, have a smaller commission percentage. The financing fee side is really interesting. Not only did the total fees go up, but the average fee rate actually went down from 0.76% to 0.64%. This means they are closing bigger loan deals on average, which is a good thing for volume, but they're earning a smaller cut on each one. One last thing that stands out is the provision for income taxes. For the 3 months ending June 2025, it's a massive 7.3 million a year ago. The company explained they changed how they calculate taxes for interim periods, from an annual effective rate to a discrete method. This shift is a bit technical, but essentially it reflects changes in their earnings and how they're accounted for. In my opinion, Marcus and Millichap's core business of selling commercial real estate seems to be growing, with more transactions and higher financing fees. However, they're struggling to translate that growth into profit, with their net losses increasing. Their big jump in operating expenses, especially in selling and administrative areas, is a factor. They're investing in people which could pay off long term, but right now it's hurting their bottom line. The decrease in their cash balance is also a point to monitor. They need to find a way to manage those rising costs while bringing in that increased revenue, or those losses could become a bigger problem. What's your take on these numbers? Do you think their investments in talent will pay off, or are the rising losses a red flag? Let me know in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more corporate insights. And hey, if you want to chat more about these filings and connect with fellow analysts, join our Discord community linked in the description. Thanks for watching. See you next time.